Welcome to day 29. Thank you guys for the 1,000 subscribers. Really means a lot, man. It's telling me that you guys want to learn more and that the things that I'm teaching right here is not garbage. Maybe it is, who knows, but if you've made money from this workshop, drop a W in the chat. But anyways, I decided to risk $1,000 of my hard-earned money into this trade, NZD-JPY, which I'll be breaking down. Why, Ivan? Why? I thought, what? Because first, I reached 1,000 subscribers, so that's my little celebration. But second, I want to prove to you guys that I am what I practice and what I preach. And today, we're going to combine everything that we learned so far from the workshop to this entry. But we haven't gone over the stop loss and take profit and risk management. So I will go over that deeply, but I did kind of like vaguely talk about this in my psychology videos, but I will include that in our workshops tomorrow. There's still a couple of things that we have to go over before the stop loss and take profit. Excuse me, because we still have to understand everything, the entries, the error, the rejection. A lot of you guys struggle with the rejection, like how to look for rejections. Well, I think this pair is perfect because it shows a lot of these confusion about the rejection or about like having a candlestick closure at the area of interest or not or whatnot. Here is an example, a live example, right? So, Ivan, why did you take this trade? Why? And why did you risk $1,000, your hard-earned money? Come on now, you didn't have to. So first, we look at the trend. Weekly is bullish. This was in my top pair of the Sunday swings. So for some of you guys asking, yes, we do the top pairs, right? We have that breakdown. And then from there, we wait for price to touch the area of interest. And then from there, we look for some sort of rejection to go to the upside, right? It's that simple, but is it really that simple? Well, let's break it down. The weekly right now is bullish. We know that. Daily is bullish. So we have 2 time frames in sync. That is key. Next, we have 4 hour. The 4 hour was bullish. Is it? No, it was bearish. See? Higher low, high. So it broke structure. So this was the new high. This was the new low. So we already cleared up the confusion that you don't need to have the 4 hour to be bullish to enter the trade. As long as you have 2 time frames in sync that is respected, then it is still a high probability trade. I'm not saying like you have to or whatnot. I'm just saying the probability is lower. The fact that the 4 hour is bearish, that's hands down, I agree. I totally agree with you guys. This is low probability, the fact that the 4 hour is currently bearish, right? It's a turnoff. But it is what it is. We get what we get. The weekly and the daily was bullish. That's what we get. 2, area of interest. Was this a daily area of interest or weekly area of interest? Well, we'll find out. We look at the daily. What do we get? We look at the weekly, my bad. What do we got here? We got candlestick closure 1, candlestick closure 2, candlestick closure 3, and these are all reject. But let's focus on purely 2025 because this is the previous price action. Again, depending on your risk tolerance. Everything that I'm saying here right now, there is no right or wrong answer. I want to clarify that for you guys. At the end of the day, it is up to you to decide your own risk tolerance, right? Are we clear? So depending on my risk tolerance, I looked at the area of interest based on the recent price of this year. Why? Because it's so fucking clean. I mean, look at this. Candlestick closure, candlestick closure, candlestick closure. What better not to come back retest for that candlestick closure? That's what I want to believe. But depending on your risk tolerance, you can look back 2 years ago and see what happened. Price was disrespecting this 3, right? Price was disrespecting this price. But I'm focused on this year. This year, the big money makers love this price. Who knows? Maybe not. Maybe manipulation. Maybe I am being manipulated. Fuck. But anyways, that's just how I look at this trade. So yeah, next we got the area of interest, right? What do we got? What else? What else? What else? What else? It's coming. It's cooking. It's cooking. It's cooking. So we have the 1 hour head and shoulders pattern. Boom, 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 boom. Right? There's a little fun little retest actually, right here, and it went up right here. Right? I took the trade Tuesday. I don't know why it's here, but I scaled in Wednesday. I decided to full port it Wednesday because I was like, fuck, I reached 1,000 subscribers. But my actual, this is my average entry right here, basically, because majority of my entries are up there. But I took the trade Tuesday after seeing the head and shoulders pattern retest to the upside. And this is, keep in mind, this is a London session, right? I go back, and then when I woke up during New York session, what do we have here? We have 9 a.m. 9 a.m. Boom. That's the entry right there. I entered at the candlestick closure at 9 a.m. We even journaled this down, but it's okay. I did enter at a bad spot here, but bear with me. Why did I enter again? Well, first, I did not enter on Monday because if you guys watched my videos about the wick concept, you would know that Monday already fucked up the Friday's low, that previous candlestick's low. So what are the probabilities of Monday touching all the way to Friday's high? Not really likely. So I waited. I waited for Tuesday. Went to sleep Monday, slept like a fucking baby. And then when Tuesday rolled around, same thing. I played with the probability game. What are the probability of price touching the highs or the lows, right? I was betting that it was going to touch the highs. So I placed my stop loss below Monday's low. Entered after, what do we enter? When do we enter? At the 1 hour, after we saw that there's a 1 hour head and shoulders pattern and an engulfing and shift of structure right there. That's where we entered, right here at the 2 hour engulfing. Okay, did I clarify something for you guys? Is it clicking? Yes, something is clicking. What's cooking? What's cooking is 4 hour, 2 hour, 1 hour, 30 minute. That's all the things that I use. But whatever looks clean is whatever that I used. The 2 hour engulfing looks cleaner than the 1 hour, but the 1 hour had a cleaner head and shoulders pattern and retest, which is why I used the 1 hour as the pattern confluence, and I used the 2 hours as my entry confluence. As you can see here, there's that engulfing, boom, at 7 a.m., 7 to 9. Once 7, 8, 59, 59 seconds, I enter at 9, boom. That's how I got my entry right here. But again, I'll tell you guys why I entered Wednesday as well, to scale in that 1,000. So that was the entry. That was the engulfing, shift of structure, boom, boom, boom. Shift of structure? What the fuck do you mean, Ivan? There's only an engulfing. There's no shift of structure. This is fucking bearish. Look at this shit. Well, I used the 1 hour shift of structure. Oh, wait. I thought you have to have shift of structure and engulfing at the same time frame. Well, it is what it is. That's what I used. At the end of the day, I think time frames, in my opinion, the small time frames, at the end of the day, everything here just makes up for the bigger picture, of where price wants to move, right? So that's how I approach the market. You could be different. If you have, again, at the end of the day, it's risk tolerance. If you want to risk your hard-earned money on this type of things, then go ahead. If you don't, that's fine. You want to wait for the shift of structure, you want to wait for the engulfing at the 1 hour and shift of structure at the same time frame, that's really up to you. It's purely just up to you. At the end of the day, the strategy is just to teach you how to read the chart, how to read it, how to analyze it, and then how to execute it. But at the end of the day, it's you who's executing. It's you who's feeling the emotion. It's you who's risking your hard-earned money. So it's you to decide whether or not what's right or what's wrong. It's all based on your market experience. All right? I'm just here giving you probabilities. Dissecting everything here. If you like it, nice. If you find it helpful, good. If you don't, it's fine. There's other YouTube out there that you can look for that teaches values in a different way. It's just different opinions at the end of the day. But at the end of the day, are you gonna want to hear a perspective from multimillionaires, you know, how they view money, or someone like me who's hard-earned money and just taking risks like this. Think about it. Your position is closer to me than to those multimillionaires. I am not a multimillionaire. I wish I was, bro. But that's how I see it, as a perspective. But have I gotten payouts? Yes. Have I gotten funded? Yes. So do I know what I'm talking about? Maybe. But again, at the end of the day, it's really just probabilities here. How do I know if you're talking is bullshit? Go look at my Instagram. Go check it out. How did I get payout? You don't just get payouts by luck. Consistently every month? You call that luck? Yeah. Good luck to you. Okay, let's get back to the topic. So that's the entry, 2 hour. And we have the pattern right here. What's next? What is next? Remember the wick concept that I talked about yesterday? Right here, right? So when I entered, the stop loss is at the previous lows. Why? Because the probability of it hitting the low, if I'm betting that it's hitting higher, it's low, right? It should hit one or the other. Price ended up never hitting both, which is fine. But when the next day rolls around, my visual stop loss is at Tuesday's low, right? We're moving forward as we go. And yes, correct, the candlestick closed on Wednesday. So what do we do here? Now the stop loss is right here at Wednesday's low. It just keeps going and going and going. Again, this is a visual representation, and I'm doing what I preach and what I taught, which is what? The wicks concept. You see, Tuesday this is the highest point. And you see how usually around this time I would get flustered. I mean, this morning, look, price really just fucked me up. It went all the way down here. The old me from 2-3 years ago, what would I do? I would close my position. I would freaking close my position knowing the fact that I was in a drawdown more than 50%. Come on now. I risked 100% and now I'm down like over 70%. It's so close to my stop loss. I might as well just close. Well, knowing that the highs and lows are respected and having that visual stop loss at the Tuesday's low, I recommend you guys just turn off your phone, turn off your laptop. Don't even look at it, because probabilities at the end of the day, if it's gonna hit, then it's just gonna prove you wrong and you're good. But if it hits the other way and respects the low, you know you're good because it respected the low. And what happened? I turned off my phone and had that. Bear with me. When I woke up in the morning, bro, it looked like this. It looked like shit. It just went all the way down here. All the way down here, man. I was so sad. I was like, damn. Am I really just gonna disappoint my viewers? I didn't even want to make this video, man. I was like, all right, bro, I'm gonna just lose this trade, man. But here I am making this video about my experiences. Yeah, did I hold the trade? Yes, I'm still holding this trade as of right now. Why? Because I understand the probability that if the lows is hit, then I'm completely wrong. But if it hits the high, which I'm betting on, then I'm fine. And what happened at the end? It hit Tuesday's high. So I'm good, right? And guess what's happened? Guess if I'm selling or am I holding? Like the percentage. Am I holding this? 100%. Bro, I'm 100% holding this. Bro, right now it is currently 2 a.m. London just opened and it already tapped the what? Wednesday's high. It already tapped Wednesday's high. So why am I not holding? The probability of price hitting the high and then the low is really low. I have a visual stop loss right here. Visual stop loss, because you don't want to get your stop loss hunted. Like, what happened to me? But anyways, visual stop loss here. The probability of price touching this is now very, very low. I'm not saying it's not possible. I'm just saying it's very low since it touched the high rate. So what am I going to do, Evan? Just continue holding and see what's going to do for Friday, actually. Well, I was already Thursday. Friday to roll around and see. And if I'm wrong, I'm wrong. But Why did I enter Wednesday? Ivan, you didn't cover about that. Why did I enter Wednesday? Well, I looked at the weekly. And when Friday rolled around, the weekly high was not hit yet. Remember the highs and the lows? This is more respected on a weekly, right? Again, this only works when it's like a strong movement to the upside. It doesn't work when there's indecisions. When there's indecisions right here, the candle will touch the highs and the lows, like more often. I'm saying not that it doesn't. It still, see, just touches the high and doesn't touch the low. It just touches the low, doesn't touch the high. It still exists, but it's just more likely that, see, that it's going to touch the low and the high because it's indecision. It's going sideways. But when it's in an aggressive move, which is what we are, buying for, then we are predicting that it's going to hit the weekly's high. And that's what happened. Why did I enter during Wednesday? Because look at Tuesday. Tuesday was right here. And when Wednesday rolled around, it still had not hit the weekly's high yet, which was right here. Until what time? Until what time? Until what time did it hit the weekly's highs? Let me see. Until 1 p.m. Bro, until like a couple hours ago. Well, a day ago. That it hit right there. Right? So the weekly did not hit the daily's high. And if I'm betting that, using all the confluences that I had, then yeah, I'm going to continue and wait till the high has been, respected. And the high has been respected. So now I'm going to continue to hold. And we'll see from there. This is just how to use the highs and the lows. It can still be a drawdown. It can still be a losing trade. Because how can this be a losing trade, Ivan? Let me show you an scenario. Thursday can literally close like this. And then Friday can either push up and break the highest high from Thursday, or it can break the low that it's, right, let's say this is the daily that closed. It can break low and go all the way down here. Why? Because this is how Thursday closed. And now when Friday came, it broke Thursday's lows and continued going down. And boom, I just lost my trade. Yes, that happens. But what am I prepared for? I'm prepared for the stop loss being up here. See that? Because, why? Because I understand that the lows and the highs have to be respected, right? So if it doesn't hit the high, then it's gonna hit the low. So even if price goes all the way down here, I have what I call a safety net where I can get out. I know when to get out. And that's really important. Before you even enter, before you even exit, you need to know what you're targeting and what you're exiting. And we're gonna cover over that. But as a thank you of 1,000 subscribers, this is the trade that I'm taking right now, live. If you guys are gonna catch it. If you guys made some fucking money from this trade, good for you. If you didn't, you didn't. But am I guaranteeing that this is gonna win? No. At the end of the day, you are here to risk your own money. So do with that information. But we're all here to learn, and that's what's important. And I'm also learning every day. And I'm still learning. See, as I'm watching this market, what am I learning? I'm learning that, wow, yeah, these are actually true. But maybe I might discover something else. Who knows? Well, with that, I'll see you guys next time. All right, bounce.